Hello, everyone, and welcome to this latest episode of the Bull and the Bear podcast. I'm your host and money markets research analyst, Matt Clark. Just a reminder, you can see all of our podcasts on our YouTube channel. Just head over to youtube.com, search for Money and Markets, and it's all right there. You'll see all of our podcasts, our new marijuana market update, also our Money and Markets week ahead videos. Plus, we've got more coming up, so just make sure you hit subscribe, get alerted every time we release a new video. You can do that as well. We post pretty frequently every week, so you want to make sure that you're on top of that. You can also, if you're watching this on video, maybe you want to listen to it as a podcast, you can listen to the Bull and the Bear podcast on your favorite podcast syndicator, Apple Podcasts, Google Podcasts, iHeartRadio, Spotify, about 20 others. There's quite a few out there. Just go and you can find us. Just look for the Bull and the Bear, and you can subscribe to us, be alerted every time we post a new podcast. Make sure to leave us a review and a comment or both. Whenever you're listening to our podcast. If you do have any questions, or maybe you have a particular stock or sector you'd like us to take a look at, you can email us at thebullandbear@moneyandmarkets.com. That's thebullandbear@moneyandmarkets.com. I'll try to put that email address down here below so you can see that. Now today, just to get into today's podcast, I want to talk about something that's interesting that's been occurring in the market, and it's something that some analysts pay attention to, some don't. I look at it as just one of many factors. So it's not, I want to preface everything by saying this is not a sole trend to look at in terms of whether you want to buy or sell or anything like that. It's just one of many things you should be looking at as an investor. If you're looking to either get into the stock market, buy a particular stock, sell a particular stock, whenever you're looking at that trading philosophy that you have. Last week, the Dow Jones Industrial Average saw a pattern form called a golden cross. Now, what this means is a golden cross happens when you see the 50-day moving average of a stock or of an index or of any priced equity or commodity trades above the 200-day moving average. On the opposite, there's what's called the death cross. This is when the 200-day moving average trades above the 50-day moving average of an asset. So basically, you see the 50-day moving average moving upwards, you see the 200-day moving average moving downward, and then eventually they meet. And what that's called is called a golden cross. When assets see a golden cross, it's typically an indicator, or it can be an indicator, that a bullish market of an asset for an asset is on the horizon, meaning that a bullish market is coming. Not necessarily that it's here, but in the upcoming future, it's going to be here. High trading volumes will usually back up the prospect of that bullish trend as well. So you want to look at what the up-down volume is. You want to look at the price of the stock. Has it hit that golden cross, or has it hit that death cross? And that's just one of many factors to look at. Before now, investors were kind of pushing the overall stock market higher, but it was mainly because of technology-driven stocks. So you saw investors that were really thirsty for fast growth technology stocks, and other sectors were kind of left behind. And now that's starting to change. And I say that for a reason. If you look at the Russell 2000, which indexes small cap stocks, more specifically, I looked at the iShares Russell 2000 ETF. It trades under the ticker of IWM. You can see a golden cross start to form. The ETF is trading at around $157 as of right now, as of today when I'm recording this. Of course, that fluctuates depending on when you're watching this. Its 50-day moving average is about $144, and its 200-day moving average is slightly above that at $145. And you might say, well, that doesn't really mean a whole lot, but it kind of does when you start looking at the up and down trends of those moving averages. The 50-day moving average for the ETF is moving upwards. The 200-day moving average is starting to move downward. So eventually, it could come to a point where those things meet, making that elusive golden cross. And it's close. It's right there. Remember, the averages are. It's not necessarily going to be today or tomorrow. It could be in a week. It could be. It may not happen at all. I mean, I don't want to say that it's going to happen, but the trends would suggest that right now, the 200-day moving average for the Russell is moving flat to a little lower, but the 50-day moving average is really on the rise and has been since about late May. You can also look at non-technology sectors of the S&P 500 to see the same trend. Take, for example, the SPDR S&P Transportation ETF. This is an exchange-traded fund that covers transportation companies in the S&P 500. It's trading at around $60 a share, give or take, and its 200-day moving average is around 55.86. And its 50-day moving average is climbing and is around 54.37. So there's about $1.50 difference right now. But again, you can't just take those numbers as a whole. You've got to look and see what the trend line is. The 200-day moving average is starting to come down slightly. That 50-day moving average is starting to move up, and eventually they could possibly meet, and that could cause this golden cross that I talked about. The S&P 500 as a whole is around 1% off its most recent closing high from back in February. The Dow is about 6% off of its February record close. And then adding to that, the NASDAQ has notched 32 closing high records so far in 2020. So what we're seeing is that the overall market is starting to boost itself up and move back into a bullish territory. And two of the indices are very, very close. The NASDAQ is pretty much already there. Transportation small cap stocks have started to mount a really strong rally and have outperformed the overall market based on returns since March 2020 lows. You remember in March, that's when the stock market really took a downturn after hitting those February highs. Transports are up about 60% from their lows back in March. The Russell 2000 has jumped about that same amount, right around 58%, and both are outperforming the major indexes. The Dow's only up 49%. The S&P has climbed 50%. The NASDAQ is close to 60%. So you can see transports and small cap stocks are really starting to mount a significant rally. However, both transports and the Russell 2000 are still between 6 and 9% from their all-time record closing highs from back in 2018. So does that mean a whole lot? Not necessarily. I think you have to look at the overall trend here, and that is that both Russell and the transportation sectors are really starting to mount into that golden cross territory. The trend could indicate a broader bullish rally for the overall market, and we're seeing that as overall stocks are really picking up. Obviously, there's been some up and down, but by and large, indices are moving higher. The biggest issue here is that the golden cross trend is only happening right now with the Russell 2000 and the transportation sector. It's not really happening anywhere else. If you look at the energy select sector ETF, trades under the ticker XLE, the 200-day moving average is around $44. The 50-day moving average is around $38. But again, similar trend is happening here. The 200-day average is falling. The 50-day moving average is rising. So it's a little bit farther off from that golden cross pattern, but it is indicating that it could possibly happen. Again, this is all kind of speculative. Don't necessarily read into this that, oh, wow, a bullish trend is going to happen. That's not necessarily the case. What these trend lines suggest is that it is a distinct possibility that this golden cross pattern could happen. Stocks could drop off, and then you could see 50-day moving averages start to turn downward, and 200-day averages move likewise, and there's no crossover at all. The same holds true for the financial sector select ETF. It trades under XLF. The 200-day moving average is around a little more than $25, and it's starting to trail off. The 50-day moving average is right at around $24, and it is starting to come up. So it's a little bit closer to that golden cross than energy is. Energy really took a beating over the first part of the year with oil prices and the like, and we've seen a lot of energy bankruptcies because of oil prices causing mining for oil just being unprofitable for companies. The key here is to identify potential market trends. Look for those signals that show when a good time to enter the market is and to increase your position is. Likewise, you want to know when it's good to decrease or get out of your positions using those same trends. Does this golden cross trend mean that a broader bullish market trend is on the horizon? It could. Absolutely, it could. But I think it's a little too early to start really kind of throwing your money into the market. I don't think we're quite there yet. I'd wait and see if other sectors start following transportation, the Dow and the Russell 2000, before really making a decision like that. So you want to just make sure you're watching these trends. Again, simple moving averages are just one trend line to look at in terms of either an equity, a commodity, or a broader index. It's not the only one. It's not the only one that I would suggest you use. There's other things you need to be looking at. You want to look at momentum. This is a big one with Adam O'Dell, Money Market's chief investment strategist. He looks a lot at momentum in terms of looking at individual equities. I think that's also something you need to look at. Is a particular stock or index on a strong uptrend? If it is, that's another factor to use in your decision-making process. So again, it's not that I'm recommending that now is the time to really buy in or now's the time to get out or anything like that. I'm just saying that this is a trend that you want to pay attention to because it is happening and it is starting to happen across the broader market. So is something to pay attention to. Make sure you check out our YouTube channel. Just head over to YouTube, search for moneymarkets.com, or just Money Markets rather. Subscribe, and you can also click to get notified every time we post a new video. We post new videos all the time. In fact, this week we'll have our marijuana market update that will be coming out here in another day or so. We'll have another podcast coming up on Friday where myself, Money Markets Chief Investment Strategist Adam O'Dell, and contributor Charles Sizemore will discuss a couple stocks. We've also got our week ahead where we look at the events coming up next week on Wall Street, things you need to pay attention to, including earnings, data, all that sort of stuff. We have all those things that come out that you want to make sure you're alerted to. If you want to listen to the Bull and the Bear podcast, you can do that on your favorite podcast syndicator. We're on Apple Podcasts, we're on Google Podcasts, we're on Spotify, we're on iHeartRadio. Subscribe. Get alerted every time we have a new podcast come out. Leave us a review. Leave us a comment. We'd love to hear what you have to say. Love to hear what you might be thinking. Like to see maybe if maybe you followed a recommendation, you've done well. We'd love to hear that. Maybe you followed a recommendation and haven't done well. We'd like to hear that too. If there's anything in particular that you'd like us to cover, a particular sector, maybe a particular stock, email us at thebullandbear@moneymarkets.com. We'd be more than happy to take a look at those types of things and see where things are going and make sure you have the most safe and sound advice before making your investments. So coming up on Friday, like I said, Money Markets Chief Investment Strategist Adam O'Dell and contributor Charles Sizemore will join me. We'll dive into a couple stocks, let you know whether they're ones you should buy, whether they're ones you should stay away from. We'll have that. Of course, we have the marijuana market update that is also growing in popularity. I appreciate everyone who listens and watches the marijuana market update. Thank you for that. We love the feedback. We're getting a ton of feedback from that, and we love that. It's all very good. Love to hear from that. Love to hear your feedback here as well. So that's about all I have for today. I'll keep it kind of short in the middle of the week. Got a couple more trading days left of the week, so make sure you're paying attention to the market. Make sure you're checking out moneymarkets.com, where we give you safe and actionable advice and information on what you should do with your investments and where you should invest your money. So make sure you pay attention to moneymarkets.com. New stuff every day, and that about covers it for me. I think that's about wrap it up. So until then, this is Money Markets research analyst and host of the Bull and the Bear, Matt Clark. And until then, safe trading, everyone.